Hello, welcome all to the online class. Today's topic is financial market. It is a second component in the financial system. As we already discussed what is financial market in our previous class, now we'll just quickly brush it up. So what do you mean by financial market? Financial market is a market or an arrangement or an institution that facilitates the exchange of financial instruments and securities. These instruments include shares, stock, bonds, debentures, commercial paper, bills, checks, etc. The price of this instrument is determined by the law of demand and supply in the market. So, financial market acts as a middleman between the buyers and seller to exchange these financial instruments that can be long term as well as short term. Long term instruments like equity. Equity shares, preference shares, debentures, etc. And short-term instruments include commercial paper, certificate of deposit, bills, checks, etc. And the price of these instruments are determined by the law of demand and supply in the market and other market forces which affect this price mechanism in these instruments. Next is financial market is broadly classified into money market and capital market. Capital market is again classified into primary market and secondary market. Primary market means new issue market. Secondary market means old issue market. Secondary market is again divided into two, that is stock market and over the counter. Next one is financial market brings investors and borrowers together. So it acts as a middleman between the investors and the borrowers. Investors means those who have surplus fund in their hand and want to invest in an institution, that is financial market. And the borrowers means those who are in need of fund. They can be government, companies and other individuals. Next is functions of financial market. First one is mobilization of fund. As financial market act as a middleman among the investors and borrowers, its main function is to channelize funds from savers to borrowers and investing and reallocating the available fund in profit earning option. Next one is price determination. Price determination is based on law of demand and supply. The demand for fund, that is short term or long term, arise from individual and industry, and supplier for this fund can be investors or household. They interact with each other and fix the price of the financial commodity along with other market forces which directly or indirectly affect the price. Next is liquidity. The instruments in the financial market have high liquidity, means at any time the commodities or instruments like shares, bond can be converted into cash. That is liquidity. Next one is easy access. Easy access means it provides a platform for the buyers and sellers to find each other and do business with ease. That is easy access. So financial functions of financial market include, first one is mobilization of fund, price determination. Next one is liquidity and easy access. Next we will discuss in detail what do you mean by capital market. Capital market is a market for long-term instrument whose maturity period is more than 1 year. This is a market where individual and government and business people go and raise long-term funds. So capital market is a place to go when we are in need of long-term funds. Here long-term instruments or funds like equity, preference and debentures are traded among the buyers and sellers. That is a capital market. Next is functions of capital market. First function is the mobilization of savings to finance long-term investments. As we know, its maturity period is more than 1 year, and these market helps to mobilize savings from the investors to lend as well as invest in most profitable option. Next one is it facilitates trading of securities. Securities like equities, preference, debentures, etc. Next is the minimization of transaction and information costs, as it is a common platform for all the investors to exchange their shares. There is a cost minimization as well as information cost and transaction cost minimization is there. Next is encourage wide range of ownership of productive asset. It also encourages ownership of productive assets like equities, preference and debentures, etc. Next, wide range of ownership means equity means on full-time ownership, owner of the company. Next, preference share means they are not the owner, they are the creditors, and debentures means they are the creditor, and it can be convertible. We have lot of options which can be converted into equity shares. That kind of instruments are also there. Next is quick valuation of financial instruments like shares, debenture. There is a quick valuation of financial instruments. Price fixation is easy. Then facilitate transaction settlement as per definite time schedule. It also facilitate a transaction settlement system for the buyers and seller within the time schedule which are described in the agreement. Next one is offering insurance against market or price risk through derivative trading. It also helps in reducing risk through an innovative instrument known as derivative instrument, which helps the investors to hedge their securities with the market risk as well as price risk. Next is improvement in the effectiveness of capital allocation with the help of competitive prices. The investors get an option for invest their surplus fund in a most profitable channel with the help of competitive price mechanism. Next is types of capital market. It is broadly classified into two, that is industrial security market and government security market. Industrial security market is again divided into two, that is primary market and secondary market. Next we'll go in detail what is industrial security market. Industrial security market refers to the market which deals in equities, debentures of the corporates. It is a market available for the company to meet their long-term funds. It is further divided into two, that is primary market and secondary market. Primary market means it is a new issue market where new securities are offered for the first time to the public through initial public offer with the help of a prospectus, means a document used in initial public offer, then right issue and private placement. These are the three methods used to raise fund in primary market. Next one is secondary market. Secondary market is also known as old issue market or stock exchange. It is a market for buying and selling of securities which are already issued in primary market. Means listed and existing company can go to the secondary market to raise their long-term funds. This secondary market is again divided into two, that is stock exchange and over-the-counter. Stock exchange is a standardized exchange platform known as NSE and BSE. Then over-the-counter is non-standardized platform which is outside the stock exchange, is known as over-the-counter market. So this is all about industrial security market.